Hi there. Do you know the 6 key steps to plan design? Or where to start when designing a sales compensation plan? Many businesses create plans without knowing that there is an actual process to create a structure for a comp plan. In this quick video, we will go over those 6 key steps. To create a plan structure, these are the 6 plan design steps that need to be completed. A plan structure needs to be done per role or job description. So it's best to lay out on a spreadsheet each sales incentive eligible role that is part of your sales organization and these 6 items. The 6 steps are on target earnings or OTE, appropriate pay mix, pay elements, measures and weighting, payment type and mechanics, and upside. Once all of these steps are completed, you will have a plan design or a plan structure in place to create a sales compensation plan. Let's go over these 6 core design steps to create a plan structure. Step 1, OTE. On target earnings, referred to by many as OTE, is simply the target pay for an incentive eligible role. Another frequently used term for OTE is TTC, or total target cash. This is how much a role will make if the salesperson completes all objectives. That is the total cash compensation. OTE is determined by the market and a company's compensation philosophy. Target pay, or OTE, is provided by a compensation survey. There are many factors used in a compensation survey to be able to provide a target pay for your role. One of the main ones is the revenue the person will be bringing in. As an example, someone who is in charge of bringing in $100,000 worth of revenue is generally paid less than someone bringing in $1 million in revenue. Step 2 is pay mix. Appropriate pay mix. Out of the OTE, pay mix is the target amount of pay that is fixed or variable. Fixed pay is typically called the salary. Variable pay can be called target variable, target incentive, or at-risk pay. The amount that we use to design sales compensation plans is the target variable. It is an appropriate pay mix because it is not dependent on the OTE amount or the target pay we just mentioned. Meaning, if 2 roles have the same target pay or OTE of 100,000, it doesn't necessarily mean the pay mix will be the same for both roles. Just like OTE depends on the role, pay mix also depends on the role. The main driver for pay mix is the amount of influence the sales role has over the customer. The higher the influence, the more leverage the pay mix, or the higher the percentage is for the target variable. It is typically displayed as a fraction. In the example you see, 80-20 means 80% of a person's OTE is base salary and 20% is target variable. The amount of money that has to be earned via a sales compensation plan is a target variable. If we apply the pay mix to the OTE from our prior example of 100,000, this means that out of the target pay out of 100,000, 80,000 is paid as base salary and 20,000 is paid as target variable, meaning $20,000 is the amount that we will use to build the sales compensation plan. The employee has to earn this amount. Step 3, pay elements. Pay elements are a type of business or item the company will compensate a role for driving or selling, that is, the focus for the role, which should be aligned with business objectives. This is a high-level category and can be multiple. Some other sales compensation practitioners call it plan components. The max number of pay elements should be 3, which goes back to the rule of 3, which states that your mind can remember up to 3 things. If you go beyond 3 pay elements for a role, then you will be overcomplicating the plans. Step 4, measures and weighting. Measures and weighting. Out of those predetermined pay elements that we just mentioned, how are we going to track that performance or measure that pay element? As an example, let's say your pay element, the main item you want to drive is new business. How will you measure that? Is it one-time revenue, recurring revenue, MER, ARR? All measures should be objective, quantifiable, trackable, and within an employee's span of control. For weighting, out of the pay elements decided upon, which is top priority for the role? What is the order of importance between the pay elements you chose? As an example, if you have two pay elements, let's say new business and renewals, which is more important? This is where you apply weighting. Weighting can also be the same. If two pay elements are equally as valuable, then your weighting would be 50% and 50%. Step 5, payment type and mechanics. Payment type and mechanics. Payment type is how you will be paying the target variable. There is one payment type per pay element or measure in a role. Using the same example as before, let's say you have a role with $100,000 for target pay. 80-20 is the pay mix, meaning $20,000 has to be earned. You have determined that your pay element is new business, and you will be measuring that with MER. The next step is determining how you will pay that $20,000, what we call payment type. There are generally three main payment types: commission, percent of target variable, or bonus. Commission is a payment type where the company pays a percentage of a sale or a flat rate per unit sold. Percent of target variable is a payment type where the company pays a percent of the role's target variable per attainment percentage that they reach. That is, if a person hits 50% of their quota, then they will get 50% of their target variable. No commission rate needed. Bonus plan. The bonus is a payment type where you pay a lump sum once a milestone is reached. The milestone is based upon achievement towards specific objectives. A common bonus payment type used by organizations is an MBO. Let's move on to mechanics. Mechanics are tools or items that you can layer in on top of a payment type. They are other tools in your toolbox that you can use to customize a sales compensation plan. An example of a mechanic is a multiplier. A multiplier is just that. It is a multiple that you can apply to a deal, a payout, or anything else in a sales compensation plan to achieve a certain objective or drive behavior. There are many other mechanics you can use in plan design, but it's always best practice to keep sales compensation plans simple. Step 6 is upside. Upside is the amount of additional incentive payment a role can earn over quota or objective. Meaning, if an employee hits quota, what can they earn above that target? Do they get paid more per dollar of new revenue over quota? Is there a higher commission rate over quota? Generally, most companies give upside for roles that go over quota. Once you have went through each one of these steps, you can put the picture together. You will get a complete picture of how a plan will look. The plan design or structure will be formed. The next step after design is plan costing or plan modeling. This step is essential for every business. It is where you will look at your expected cost based on the plan designs you have chosen for each role. Part of this is CCOS, or compensation cost of sales. Next is creating all the documents. The sales compensation plan, which is the terms and conditions or policy, the actual legal document, and the most important document in any sales compensation program is the sales compensation plan. This document governs the relationship between the company and your sales employees and includes the plan designs you have determined in these 6 steps. The calculator is a commission estimator or incentive payment estimator that is usually shared with reps so that they can forecast their commission payment for a sale in the pipeline. The plan rollout is a high-level overview or presentation to your sales team, typically done before you send out the sales compensation plans. And last but definitely not least is the communication plan. How you will communicate the plan and deliver the documents need to be planned with this entire process. It is the outline of all communication to sales leaders and individual contributors. Communication is key with sales compensation plans. Now, these next steps, I know, sound very cumbersome, but we have resources to help you. At Sales Comp Academy, we know it is challenging to create effective sales compensation plans, which is why we have resources, tools, and best practices to help you create your own programs. That is our vision and mission, to empower businesses to create your own sales comp programs. We just went over the 6 key design steps to create any sales compensation plan, but there is more detail that goes along with that to create an effective program. There are design factors that need to be taken into account before you build any plan. These factors will make or break your comp plans. There are also implementation guidelines and documents that need to be created. All of these are included in our Plan Creators package, which is a step-by-step program that you can complete in one day with all the resources you need, including downloadable templates. Plus, you will have access to the course creators for up to a year in case you have any questions. This package is the best package for new businesses or companies trying to build a sales comp program from scratch. The other option we have is the one-on-one sales compensation consulting. This is a different type of consulting than the ones you may have heard of. Most consulting companies have one-time contracts with hefty fees and then they disappear after the contract is over. Once you have implemented the plans and have a question, it's considered an upsell or additional revenue to them. For us, it's a bit different. We value the relationship we have with businesses and want to be part of your sales comp journey in your business. For our one-on-one consulting, you will have a dedicated, experienced sales comp consultant with years of experience in consulting and in managing corporate programs. We will partner with you in designing or managing plans. This option is good for those who have some experience in sales compensation and just need overall guidance or recommendations. We call it sales comp coaching. Lastly, we have ad hoc resources, which are downloadable resources like our base commission rate calculator. This is for those of you who don't have the time to build or determine the base commission rate for a sales role. We do the math for you. For these 3 options or for more information, check out our website at salescompacademy.com/store. I want to thank you today for watching this video until now. I hope you found this helpful. Again, if you have any questions, please feel free to reach out to us at the email address displayed on the screen, which is info@salescompacademy.com, or visit us at salescompacademy.com.